Hey there, it's Bill with Smart Trades. It's Tuesday, April 12th, just after 1 o'clock Pacific time. And going to do a quick update here today on the S&P. Let's start off with the hourly cash. And we had a bunch of breadth divergences heading into this decline over the last several days, even the last week or two. As you can see here, the NYSE advances were not confirming this peak. As some of you may remember, I had a target of 1344 basis, the S&P, and we did fall shy of that target by about 0.4%. However, the basic scenario seems to be playing out. Now, it's possible we peaked on Friday, and from there I think it best counts as a 1-2 and then an impulse wave 3 down. Now, we don't want to overlap wave 1 or in particular take out the top of this small wave 2 up here, which I believe is around 1344, if indeed this is a top. It's still not beyond the realm of possibility that we're going to go back up and test 1344 or even higher, but my favorite count is that we have peaked short term. Again, as you may remember, we were looking for a rally to 1344. This is an actual overlay that I had published, I believe, on the 28th of March. And as you can see, we've pretty much followed the scenario. On the short term, I thought that we might have a few more zigs and zags in here, but ultimately the pattern is playing out pretty clearly, pretty much in sync with the projection, again about 0.4% under the perfect 1344 target. And you can see on the daily chart we do indeed have those negative breadth divergences, as well as a bit of a downtrend now in breadth on the daily NYSE advances. Here's the alternate count. It's possible that the March low is a completed wave 4. I don't favor that because there's no alternation between the wave 2 decline back up in late summer. So I think that this best counts out as, you know, a 5-wave structure, 1, 2, you have 5 waves up in 3, and that the decline into the March low is A. That said, again, it's not beyond the realm of possibility that was the end of wave 4. Alternation is a guideline, it's not an absolute, and so it is possible that we're going to go up and perhaps make a new high around 1365 before we go back down. But again, my favorite scenario here is, and I stated it over 2 weeks ago, is that we've got A down into the March low, the recent high is B, and a sharp C wave could take us down as low as about 1245. If we were to go through about 1240 or so, and particularly if we did so with a vengeance, it's likely that this is a larger decline than I've noted here. But I think that it best counts as an evolving flat correction, and I believe that we're in C of that flat right now. So let's watch it and play it out, but as of now, that's my assumption. Bonds, is looking at TLT here, and we do have a nice little support level that we've bounced off of. It does make sense that the bonds are going to rally if the stock market declines, and I think that this count, which again I've published for some time, is the most likely scenario, in that we have an A up, we've got a B down, possibly complete here right at that previous support level, and that we're going to work on a C or perhaps some form of zigzag. It could evolve into something more complicated, like your XYZ type pattern, but we shall see. Crude oil surprised me to the upside and has fallen just a little bit short of my target to the upside, and has fallen about, I think it's down about 4% today, and more than that off its highs. At any rate, we were looking at the weekly chart here, And looking at this larger channel and looking about the 115, 117 area is the top of the channel. Obviously it hasn't reached there. Excuse me. It's possible we'll get there yet, but I favor that indeed crude is probably peaked given the velocity of this change in trend. And I believe I mentioned natural gas in the last report. Here's a 240-minute chart of natural gas. I think that we do possibly have a bottom, and indeed we may even have a series of 1-2s off of the low. Here's that 240-minute chart. Here's the longer term. Here's the weekly chart. We have a wedge type formation. We failed to follow through on this recent low. This wave up labeled here as 1 I think counts out pretty clearly as an impulse wave, and from there you can count down A, B, C, either of a wave 2 or a B wave. Now one thought here is that with all these problems with nuclear right now, that perhaps Japan and others will look at natural gas as an alternative. That's really just kind of a wild thought at this point. I'm really not a fundamental trader, or I don't think in those terms for the markets. That said, the pattern to me does look pretty clear. You've got pretty well-defined risk-reward ratios here, even in the case if this is a up and a B back down. The rally should take us up to 5 or so. So the risk-reward in here is pretty good. And if indeed this is a major bottom and this is a 1-2, we could be going up to 6, 7, 8, who knows where, to the upside. But as always, we'll play it one step at a time. And I think let's make the assumption at this point that this is a 1 or an A up. We have a 2 or a B down, and that we should have another similar sized rally to the upside from here. Just a quick report today to review again, and it looks like the stock market so far is following our scenario. We'll see how it plays out. We've got pretty well defined areas to reverse here. Go back quickly one more time and look at that stock market chart. Again, A down, B back up, and I believe we're in C right now. So we shouldn't take out this this recent high, obviously at around 1339 and change. But the first red flag would be a rally above 1334 on the S&P cash. And also watch the breadth ratios. You could see a quick pop up on a rally, but we shouldn't see any kind of sustained advance readings above 2500 or so if indeed we have a top. And again, I'm not calling it for an ultimate top here. I'm calling this for a top in wave B. But we'll see how it goes. Anyway, thank you for watching and have a great week. Bye-bye.